Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Looking at Twitter GoPro X CHK daily weekly time frame. Starting it off with Twitter, we got nice continuation. So we were a bit cautious after the big move to the upside with a little bit of the upper wick, but the bulls controlled all of Friday and the volume was there. And again, you can compare the volume in the first hour of trading and it can give you a lot of insight as to what to expect for the rest of the day. So if you compared volume in the first hour of trading any day, Wednesday, Thursday, Friday, and compared it to any day in the past week or two, it was very clear that the day was going to have high volume and the volume was definitely in the favor of the bulls. So here we are looking at this resistance of 1872. On Friday, we got up to 1863. Still need to be a bit cautious because that resistance is still there and we are forming lower highs unless we break that level. If we do not break that level on this initial attempt, it's not a huge big deal for the bulls. We will look to consolidate, back test all these moving average supports in the mid to upper $17 range, potentially maybe even holding exponential support if the bulls are truly very strong. But just a little bit of normal healthy consolidation, and ideally on declining bear volume, find a higher low, and then the bulls will look to see a continuation move and break those levels. So the weekly time frame confirming the bullish reversal doji in a big way and closing at the high of the week, favoring the bulls with that momentum. So the main resistances that stand out to me are 1872. The 100-day moving average resistance is going to be in the lower $19 range this coming week, and then the main level is 1979, the high that we saw on this bounce. GoPro on the daily time frame, still very tight. Still a bit of a descending triangle pattern. It does look like the bulls have a bit of momentum, and I can say that because of the volume on Friday. That's some solid bull volume. So if I were a bear, I would be cautious, and I would be looking to exit my position. Well, it all depends on your time frame. There's so many individual factors going into your trade. But personally, I would be letting the bulls tire themselves out after a bounce, because if we break 799, we could easily see a move into the 820s. So I would want to be cash if I was bearish, lock in profits down in the upper $7 range, and then patiently wait for the bulls to tire themselves out, perhaps another rejection from the middle Bollinger Band daily resistance. It's all about 799. If we can break that level, the bulls have some momentum. If we cannot break that level, we're still looking down at this base of support of 757, 760, 762. So that base of support is very important. The bulls have established it pretty well at this point, and they're looking to try and break that 799 level early this week. Weekly time frame, so again, it's this lower Bollinger Band that continues to hold, and it is descending down, creating room to the downside each week, but it's not descending down rapidly. So the bulls have held that now 2 weeks in a row, and that's helping those bulls build that base of support on the daily time frame that I just showed us. So X on the daily time frame, bulls with a nice follow through on big bull volume in reaction to an upgrade, and we could see that action first thing, and there was really one candlestick on the 5-minute chart that stood out to me in the first half an hour of trading, and it was the volume climax of the morning. Anytime you see a 5-minute volume candlestick with a volume climax that is not in the first 5-10 minutes of trading, that stands out, and the direction that it occurs should absolutely be the direction that you're making the trade in, because it is not often that the highest volume candlesticks on the 5-minute chart occur after the first 10-15 minutes have settled down of trading. Here on X was an example where we saw that occur and it stood out for those bulls. And once we broke that level, this high of this bounce at this point was 2175. That was a bull signal, and we got nice follow through to the upside. We did close just below the upper Bollinger Band, just below the 50-day moving average resistance. The next key level is 2274. If we cannot break 2274, we will look to consolidate and backtest the middle Bollinger Band daily support. If we do break 2274, that will be significant in the shorter term. And we did see some unusual option activity in X about a week ago that was a bullish bet, and there's no doubt in my mind that that person was aware of an upgrade that was coming, because there was nothing technically speaking that would have that person making that large bet for the bulls. And of course, here at the end of the week, bulls show up on an upgrade. So on the weekly time frame, we're still in this channel, and this is the channel to be watching. Because of that close this week, it's a lot less likely that it is a bear flag on the weekly time frame. Certainly still possible, but I'm just watching for a close above 2303 on the weekly or a close below 1985 and a break of this channel in one direction or the other. So right now the bulls do have momentum. We'll see if we can break this 2274 level and see continuation, and if not, we will look for consolidation back to that daily middle Bollinger Band. CHK is trying to form support to see a short-term bounce. We have a bullish reversal hammer here. Resistance is 459, 463, exponential resistance. And on a short-term bounce, we can look for the bulls to tire themselves out and make a bearish entry once they have tired themselves out. So the weekly time frame obviously favoring the bears, with another bear flag confirmed with another leg to the downside. Support is 438, followed by 430 and 417. So as long as we keep seeing lower highs and lower lows on the weekly, the longer-term trend belongs to the bears, as it has all of 2017, and that remains the case. Short-term bounce on the daily time frame, more likely than not, and we can scout for another bearish entry, anything around $5. We know that $5 level was solid support. It's solid resistance now at this point. I'd be surprised if the bulls could make it all the way back to that level, but if you watch the oil and natural gas videos that I put out this weekend, we are anticipating short-term bounces there as well, so anticipating CHK will see the similar action. I appreciate you watching. We will see you sometime soon.